Monday, the 21st of December. Welcome. My panel is Joshua Debisi from Vetiva Capital Management, Alikan Sachu from Nairobi, the CEO and founder, Rich Frontiers Management, and Akitudi Sulaiman from Greenwich Merchant Bank. Good morning, gentlemen. It's good to have you. Hope you all had a great weekend. The Nigerian stock market seemed to be the best performing on the African continent last week. You just look at the numbers across the 5 major exchanges, and there's no further comment on that. But the Kenyans are going to be the one partying today with the entertainment company getting listed by introduction, looking to raise a couple of 100. It's called the Homeboyz Entertainment on the growth segment of the market. We've got a growth segment of our own market here in Nigeria as well. Congratulations, guys. They could have just done the listing before the 25th so that the party can go on. But again, let's get some music into that. Kenya Airways is ending its corporate marriage with Air France KLM ending the JV September next year. That's some bad news as far as I can see it, but perhaps that will give Kenya Airways a new horizon. Ali will give us a sense of that. Airtel Uganda has gotten national telecommunication operating license, and unlisted companies start their trading platform on the NSE. It looks like innovation has been the keyword for the Nairobi bourse since 2020 started. Ali, let's start with Kenya Airways, Air France KLM.
So this story has been swirling around for quite a while. There was a review under the previous chief executive officer. Interestingly, that review found that the benefits of the relationship were greater than the benefits that would accrue from leaving the relationship. However, there's obviously been a change of mind. And Kenya is seeking to extract itself from this Air France KLM JV. That will mean Air France KLM hold about 20-something%. I'm not sure how that will be dealt with, but essentially I think we're heading towards nationalization. The balance sheet of Kenya Airways has too many holes in it, and essentially will need to lean on the sovereign guarantee at this point in time. So I think it's a realization of that fact, and a sense that if you're going to provide a sovereign guarantee, then you probably would prefer it to be a Kenya pure play rather than a mixture. So an interesting development. Obviously, it's been a brutal year for airlines. I was just watching this morning, British IAG was down about 12% as well. It's been a very tough year for the airline industry, as we know, and I don't see a quick recovery. So I think you're going to find many governments will have to continue to shore up balance sheets all across this continent. NSE, this Homeboyz Entertainment, this is an introduction via listing. This is where you don't actually sell shares, but you put shares on the bourse for trading purposes. So it's not really an IPO, it's an introduction. Plenty of excitement this morning, a bit of razzmatazz I saw on some of the feeds. Homeboyz, very successful radio, media, entertainment business. It'll be interesting to see what the market thinks about the valuation, because I see they introduced it just below 5 shillings and the best bids were around £1.50. And this is a problem at the gems market, in that some businesses were brought at very extreme valuations and then kind of fell off, and that didn't create a positive vibe. Airtel Uganda issued with a national telecom operating license overdue. Ethiopia, that's Africa Insurance, records 45.7 million profit after tax. The insurance business in Ethiopia is going to be very interesting, if not very volatile, going forward, given the political uncertainty and some of the unrest we've seen in other parts, not only in Tigray province. If I might just finish off by speaking quickly about COVID, which you were talking to before we went to video. Last week, Africa numbers went higher than the previous peak, that we had earlier in the year. And there is tremendous concern, I think, that we are seeing a second wave, and exactly how our countries are going to manage that second wave, given that it would be an economic time bomb if we shut down as we did previously.
Yes, you're very correct, Ali. When it comes to the virus, I'm sure Joshua and I can see that we're all waking up this morning to those very, very hard restraints and restrictions from the Nigerian authorities, both at the federal and at the state level, especially from states with mega cities such as Lagos State, avoiding virus lockdown, hard restrictions coming through from today. Even the Securities and Exchange Commission says no market operators or staff should come to the office. They don't want visitors coming into the any of the offices, the headquarters in Abuja, the Lagos, and other offices. That's one big story that we're all waking up. Lagos State civil servants are also grade level 14 and below asked not to come into the office for 2 weeks. Schools are on lockdown. Nightclubs, carnivals, whatever for year end has been closed in Lagos. That will affect folks who are in that very little business. Entertainment event centers need approval to hold events. 300 people within a confined place. If the number is bigger, then you get yourself into some trouble. Investment and Securities Tribunal stops Chaka Technology from trading in stocks or providing the platform. The SEC says this company has no registration to trade in either local or international stocks. Cote d'Ivoire is floating about 120 billion CFA franc on the UEMOA market, 2 bonds, which will be on the markets this week. In BRVM, the NSIA Bank is finalizing the takeover of Diamond Bank of Cote d'Ivoire. NSIA is quoted on the Ivorian stock market. AfDB okayed $9.8 million for COVID-19 resilience for Guinea-Bissau. And another good news yesterday, the board of the AfDB has approved $10.8 billion global market debt raising by AfDB for the year 2021. And Senegal inflation at 2.4% last November. Avoiding virus lockdown. Joshua, what's your take?
Well, I mean, you summarized it a little bit, Boston. I think it's quite obvious that whatever was working before has stopped working. You know, there's a bit of news or speculation that there's been a bit of a mutation with the virus and that the new strain is far more contagious, and so it's spreading a lot faster than the previous strain, which is why we're seeing such a rapid spike in cases. Now, whatever the case may be, I know for a while, people, especially in Lagos, had gotten quite complacent. You know, once lockdowns were sort of eased, we saw a return to almost the norm with regard to, you know, interacting in public places. There was very little enforcement of, you know, the use of masks and social distancing. So I know that would have obviously increased the level of transmission that we've seen. Now, the objective, I think, is just to, you know, avoid another complete lockdown, because our economy cannot really handle another one of that sort. You know, we've seen the numbers from Q2, you know, our economy was down 6.something%. Even after we reopened, we still were, you know, in the middle of a recession as at Q3. And if we do anything of that sort, you know, Q4, even though we're really at the tail end of Q4, we would see, you know, something bleed into probably Q1 of 2021. And we're trying to avoid at all costs, you know, carrying all this economic hardship into the new year. So I think what really needs to happen is there needs to be an increase in caution from, you know, the general public and also from the government, because the truth is there's no need to really lock down per se. However, there is need to enforce the rules that will keep the spread, you know, limited. And once that is, you know, once that happens, I think we can continue. You know, we were in such a good place with regards to how we were working from home, you know, and keeping everything sort of limited. If we can go back to something of that sort, I think we should be able to avoid a complete lockdown.
I completely agree with you. Suleiman, in terms of what the IST came out with on the this Chaka technology, what's your take on that? Do you think we're talking about crowdfunding just a couple of weeks ago, I think last month, when the whole issue came about how crowdfunding have taken investors' funds and they're not paying back and what have you. Do you think we have a bit of a little problem on our hands here coming through the fintech, the digital technology space?
Yeah, I agree. I think that there seems to be a gray area. There seems to be a lacuna as to regulations that covers this sort of investment vehicle or sort of way of investing, and that is what the SEC has realized, and the IST being the apex adjudicator in capital market disputes and regulation has seen that there needs to be some sort of suiting in terms of regulation across how investors can invest in foreign stocks and how investors can be protected, because you know that amongst the duties of SEC is protecting investors' funds and protecting them against fraud. What Chaka has done is to use some sort of Nigerian investment company. I think they're using City Capital in investing in their local stocks. But where SEC has a big issue is actually how Chaka has seen, or how it has played on, or how it has outlaid its modalities on investing in foreign stocks, and that is one thing that the Nigerian capital market has not found a regulation to cover. So what this will put out is that a lot of these fintech companies, a lot of companies that are now into investing in foreign stocks, will have to seek some sort of regulatory approval or some sort of registration with SEC on how to go about the business, and SEC as well has to lay out a framework, a guidance on how those funds can be pulled and how they can be and how they can outlay it in terms of investing in foreign stocks. I think what these are just pop to us is that there's a gray area that needs some regulation, that needs to be suited in terms of in SEC's action to protect investors away from what we have been seeing in the past, where a company goes down and the whole fund is out. What Chaka has done over the weekend is to calm nerves of investors, to say that they have been using regulated investors or regulated capital market operators to invest in their stocks, so they have no fear of losing their cash. They cited City Capital as their investors or their vehicle in investing in Nigerian stocks, and they have partners in America as well in investing in American stocks. So I think what SEC just needs to do now is to bring these fintech companies in, sit them down, and let's create some sort of regulatory framework to guide across how they operate and how they go about their business in order to protect investors and not spur up that negative sentiments that investors usually have to Nigerian capital market in terms of loss and downward movement of assets.
Yes, to operate this open skies kind of a thing, I think you need to touch base with your domestic regulator. There's no way you can do it. To my mind, as a journalist, I don't think you can just go in and pick U.S. stocks. They used to trade it in the U.S. If you trade Nigerian stocks and you're trading it as a company registered within the U.S. jurisdiction, and I'm sure the U.S. SEC will give you some phone calls or send you a memo. That one I am very sure of, because again, it's American investors you're asking to invest in Nigerian stocks. We do that over there. So it's definitely good to find one way or the other, at least even if it's just an ordinary letter of recognition or whatever from the SEC, that would have been that would be in place. Again, we can't afford to let everybody. The stock market is all commerce market, but when it comes into trading and fronting as an investment firm, then it's not an all commerce market. That I know. Everybody's welcome to invest, but if not, you're going to just spoil the party, as the case may be. So before we run into big problem, I agree with you. The regulators need to quickly set the framework for us. What's the story from Southern Africa as we start a brand new week? It looks like the Zimbabweans have a way of getting their currency recover, and I think they're not doing too badly. so far this year. So a better Zimbabwean dollar pushed up revenues for Tongaat. Sanlam Life Insurance is acquiring 35% minority stake in Africa Rainbow Capital. That's looks like a good time for Sanlam in Southern Africa. Botswana Seed Co says it's expecting interim profit before tax for half year to be around 295%. That's good money. And the depository company for the Zimbabwean stock market says registration of 278 new shares in November. It looks like Ali, the Zimbabweans seem to be, the financial market seem to be on a different trajectory from the rest of the economy.
Yes, so I think that improvement, or what we call is stability, and stopping of the slide in the Zimbabwean dollar has proven quite helpful to Tongaat Huulet. And I think that these companies who've been through the most volatile times obviously have got strong defenses now, and should really start to outperform if the Zimbabwean dollar can continue to remain stable this year and hopefully next year. So that's a good outcome, I think. The depository company registering 278 new accounts, at least they're being transparent, but by all means they need to do much more. And I think the Zimbabwean government would be well advised to look at IPOs in their market in order to encourage and excite the market going forward. They've got a lot of assets where they're looking to divest a stake, and they would do well, I think, to look at a program of divestment. Sanlam Life Insurance using this opportunity of depressed prices to acquire a minority stake in Africa Rainbow Cap. And this story from Botswana Seed Company expecting a surge of 275 to 295% in profit before tax. Interestingly, similar story coming out of Kenya as well. And I think what we've seen this year is the centrality of the agricultural and farm economy. And if you look across the continent, that farm economy has been a standout. People need to eat, and there's been strong demand. South Africa, after initial dips, saw the biggest demand for citrus fruits on record, for example. Egypt's oranges, they've never sold so many. So you can see that the farm economy is outperformed, and therefore you'd expect these seed companies to do well during that period. So that's, I think, a bullish call, and bullish for agriculture going into next year as well. Just to talk about the rand. The rand is, last time I checked, 1476. So that continues to strengthen as people get a bit more optimistic about the economic recovery. Of course, we've had a huge rally in the rand from admittedly very beaten up levels. It'll be interesting to watch in the next few weeks what happens, given the virus story that's been unfolding, which is locking down the United Kingdom and other places as well.
Yes, and the dollar seems to be making some comeback this morning. I checked through the dollar index, about 90.25%, up by 0.5% about 2 hours ago, Nigerian time. So it looks like the whole, and gold's also heading back towards 1,910 this morning. Silver has taken a whole new flight from 24 to 25 to 26, now above 27, heading towards $28 an ounce. So it looks like sentiment is beginning to, but again, Joshua, let's talk about the Nigerian stock market last week very quickly. Give me a minute of that. When you look at this 7.5% jump, one of the highest we've seen in many years. So where is this optimism coming from? Is this the Santa rally? Is it going to run on till Christmas this weekend?
Well, I think there's a multitude of factors that are causing this jump that we've seen. But I think when we observe the market, it's quite obvious that investors are taking the view that going into next year there's going to be some returns to be made. I think before I even talk about all the heavyweights, one thing that I've observed looking at the market every day is that there some savvy investors have been really taking positions in some smaller agricultural players, for example, your FTN cocoa. I've seen FT and Coco consistently, trade at upper limits, for multiple sessions. So I think what this is saying is that a lot of investors are, looking at the market, looking at the economy, and thinking that next year a few things are going to happen. Number one is we're going to see a jump in agricultural output. Another thing we're going to see is, improved economic activity. So obviously, with regards to, your cement players, because we've seen a lot of activity on your Dangote cement, even on your WAPCO, less so on your BUA. It's been up and down more or less, but you know that the investment and industrial goods sector is the best performing sector this year. It's up by almost about 50%. So I think that this tells you that investors are looking at the markets and they think that what's going to happen is we're going to see a lot more spending from the government. So there's going to be a lot more construction, a lot more capital expenditure, that kind of thing. We've seen a little bit more, activity in the banking space as well, of course, but that one is more geared towards, I think, trying to take positions before any kind of full year announcement and, any potential dividend yields that the banks are going to give. So I think all these things are just investors really strategically taking positions ahead of the potentially greater returns that they plan to see next year. And I think that that's what we're going to continue to see for the rest of these, few sessions of 2020 up until even maybe early stages of January 2021.
Well, I think whatever happens, agriculture and agro-allied is looking like the new economy around the corner. Whatever happens to the virus or lockdown, whatever, folks will have to eat even when they're at home. So you're keeping kids at home. There's no school. For example, in Lagos, you've got to eat 3 times a day, if not more. So whatever happens, if you can't go to the stores and buy the big food, then you can still buy the local agro produce and you'll be sure. So with agriculture, it looks like it's a win-win right now. Whatever happens to anywhere in the world, the living will have to keep eating and keep the virus away. And being healthy, by the way, is also part of the get your immune system up to speed with good food. So agro-allied, it looks like that is the way to go. Suleiman, I'm coming just in a few seconds, but let me see what the North African looks like with the Norway forgiving Somalia $1.8 million debt. That looks a very small amount of money to Ali, but I'm sure for Somalia, $1.8 million is a whole lot of, it's a whole chunk of money. This is your Royal Air Maroc planning to sell off his Boeing 737 and cut 30% workforce. I feel so much for the airlines, by the way, because again, Nigeria presidential fleet has about a dozen or more big planes. I'm sure if we put them on the market, I'm not sure who is buying right now. Even Boeing will or Airbus will be hard put to buy any plane right now, because who is flying, by the way? With Saudi Arabia this morning announcing there will be no international flight in and out of the country, at least for the next 1 week, because of the new virus strain. Ali?
Yes, I'm totally with you. I think, I missed some of what you said, but I think, the Royal Air Maroc story, look, you got to give them credit. They're dealing with the problem, you see. I think a lot of people are throwing Hail Mary passes and hoping by next year the vaccine's going to come and rescue them. And Royal Air Maroc is resizing the fleet, cutting the workforce and doing the tough stuff that a lot of people have skipped doing until now. So I commend them for that. As you said, Saudi Arabia has locked down the borders again, and we're going to see a lot more of this, particularly if this mutant turns out to be as transmissive as we're hearing. And just quickly to touch on Somalia, this is Norway waiving 1.8 million debt. It's not the actual amount; it's the message that it's sending. It's freeing up the Somali balance sheet going forward. Of course, we've had a lot of volatility. There was an IGAD meeting this weekend. President Farmajo Kenyatta, Prime Minister Abiy, and the President of Djibouti were all there. And they've really, and the Sudanese Prime Minister, I believe. And there's a lot of interest in this whole situation. Somalia have pushed up the military to the Kenyan border, apparently, Turkey helping them with logistics of moving these military personnel to that border. And I think, President Farmajo has been very forthright and pretty aggressive lately. And I think that's coming from some of the supporters is getting out of the Turkish presidency. And I think Kenya, interestingly, are trying to dial down the noise, but it would have been fascinating to have been a fly on the wall in the discussion between those folks at the IGAD meeting over the weekend.
Yeah, okay. Thank you, Ali. I can today just go trying to get your perspective on the market week. Suleiman, you there?
Yes, I am. I think going into the new week, we'll see a lot of trading in the equity market. We'll see a lot of investors taking position. However, we will not rule out some profit taking because Christmas is coming. We expect people to book some profits for spending. The fixed income market as well. We saw last week the bond market was quite bearish, understandably because the DMO spiked rates in the bond auction. So what it meant was that investors needed to sell down their holdings, which were already at low yields, and come back into those newly issued bonds. But the perspective is this: investors demanded more yields from DMO. Bids were not as solid as we had seen in the past, and the bid spread was quite higher at this time. So what we saw was that the DMO issued only 30 billion out of about 60 billion of bonds offered. So we would see some bearish tail into the bond market. The bills market would see some sort of bullish trend with the reduced spot rates that the CBN issued last week. We'll see some buying into the bills market further by the excess liquidity in the system. The Homeboyz market will remain quiet. We do not see a lot of actions. We do not see a lot of traction in as much as the FX liquidity should persist. Investors are still, as foreign investors are still concerned as to how they can repatriate their funds, and that has tailed into what we are seeing in the equity market. We've seen some stocks rally quickly, fast, not due to fundamentals, but just because they have some sort of dual listing, and it's a conduit for investors to actually take out their cash.
Interesting how we get this week along. Thank you so much, three of you. Joshua Debisi from Vetiver Capital, thank you so much. We appreciate your time bright and early. Suleiman, thank you so much from Greenwich Merchant Bank. And Ali Kansachu, thank you so much for today. We'll see you again tomorrow. Bye for now, everyone. Thanks for coming through on Frontier Opening Bell.